afternoon, good evening, wherever you are joining us from. And thank you for joining us for our first webinar in our webinar series, Diversification 5.0. We are very excited to have Jan Wegelin online with us today as our expert and panelist. Scott will be introducing him a little bit more in a second. But before we get started and we say hello formally, I would like to let you know about a partnership that we have with B1G1. B1G1 is business for good. Scott, would you like to go to the slide for me? Thank you. So part of it is that everyone who is on this webinar tonight has contributed to a day's free education to a child globally. But as we walk through our webinar tonight, we are going to be supporting three causes: education, water for people in need, and planting of trees. All of these three causes are very close to our hearts. So as you comment in the chat box and you provide any questions in the Q&A box, we ask that you put E, W, or T either in front or at the end of those comments or queries, a combination of them. And for every one that you put one of those letters for, we will be contributing either a day for education, a day of free water, or planting a tree on your behalf. And towards the end of the webinar, I will be tallying them up, and I will be letting you know how much we have contributed to people and to our environment. So as we'd like to know, and we are a global community, we'd like to ask where you are joining us from today. I am sitting in sunny Costa Rica. It's the first sun that we've had in 3 days after having torrential rain, so we are very excited about that, but I can tell you tomorrow we will be wishing for rain again. I know that Scott is currently in Stellenbosch, coming to you from the Western Cape. Jan, where are you joining us from tonight?
Johannesburg.
And Jan is in Johannesburg, which is Gauteng, South Africa. So please pop into our chat box where you're joining us from, and please don't forget to put E, W, and T. Now, as we move through our webinar tonight, you will see that we have activated the Q&A box. So we ask any questions that you have, please put in the Q&A box and not in the chat. It just makes it easier for myself, Scott, and Jan to actually find the questions and make sure that we are answering those throughout the webinar. So without further ado, I'm going to hand over to Scott and get this webinar formally started. Good evening, Scott.
Awesome, Lee. Well, thank you very much, and wonderful to have both of you online. I am sitting in an Airbnb with with a backup inverter or whatever with load shedding. So it's going to be interesting to see if everything works and goes according to plan. I'm very, very excited today to hear the presentation. We did sit down with Jan yesterday, and he took us through the framework of it. And so I just want to recommend to everyone that we've got something really, really amazing in store for you. What I wanted to share with you was what Diversification 5.0 is all about. And it's quite interesting because when you look at it, what we've tried to do is bring a different group of speakers to the table. I'm going to share with you just now about Ray Dalio and why we talk a lot about Ray Dalio and how he talks about diversification and how it's so important in this modern, what do we call it, uncertain economy for people, as an investment strategy. And what we're trying to do is we're starting tonight with Jan, and he's going to be taking us through, the psychology of investing and how different investors behave, and more importantly, how we can all get swayed by the large investors in terms of what happens in the market. Then we're going to have a market update where Andrew Mobsby and Goth Wellman have done this in the past, highly effective, talking about the different markets, what the risks are, what the different opportunities are. We're going to have a webinar by Mark Robinson on how to build portfolios. We have done one before and again had very good feedback from people. And then I'm actually going to be doing a webinar where we break down the different basis of a portfolio and how you actually build up diversification. And we actually intend and are quite excited. I can't mention it, but it looks like we've managed to secure a partnership around this whole Diversification 5.0, and so might turn this from a month into actually a year. and I'm interested, Jan, after your presentation, I'm sure you will probably agree as to why it shouldn't just be a month, but it should be a year, because it becomes such a fundamental philosophy for investors. I just wanted to share this. Now, I'm not going to give you the whole presentation, but ultimately, this book, Unshakable, by Tony Robbins, he went out and he interviewed 50 of the wealthiest people in the world, And he finally put it down to 4 things that you need to do if you want to, get wealthy and copy wealthy people. The first one was don't lose money, which Warren Buffett says. I'm not going to go into the detail of these. Asymmetric risk reward. The third one was tax efficiency. But the fourth one was diversification. And it was diversify across asset classes, within asset classes, across markets and currencies, and it was across time. And he basically spoke to Ray Dalio, who went on to say you need 15 uncorrelated bets, an array of attractive assets that don't move in tandem, and that reduces the risk by 80%, and the risk return ratio increases by a factor of 5. And I virtually guarantee you, unless you've been to one of our presentations, you have no idea what I just said there. And so I'm going to explain to you, and actually at the end of this evening, I'm going to share with you a live workshop, an online live workshop where we can actually explain this in more detail, because what I feel very strongly about with Jan tonight, and even if you hear from Ray Dalio and others, it's all good and well to have the theory, but if you don't actually turn it into practice, then it doesn't help you at all, okay, in terms of that process. So there's a book by Ray Dalio called Principles, which I highly recommend. And I wanted to play 2 videos for you quickly, and then I'm going to hand to you, Jan. The first one was a video that was an online TED Talk. It's an hour-long video, and I'm going to share the link with you, but I'm only going to play you literally 2 minutes. And it's this lady from TED asking Ray Dalio, it's March, here where you can see actually, it's April 2020, the world's in crisis, we just had COVID, and he's like, what do you actually do? And she's asking the question.
That's very different from the passive investment market, which is such a huge part of it now. And that's where most people, the average person has their money. And I know that everything's changing day to day, but I also know that everyone's going to have this question on their mind. So I'm going to ask you, I'm not going to ask for specific investment advice, but everyone's thinking about their 401ks. Do you have any general thoughts about how people should, approach this time period with that kind of money?
An investor must understand that they probably will not be able to play the game well. They probably will not be able to decide how to move in and out of things. In order to be successful in the markets is more difficult than getting a gold medal in the Olympics. You wouldn't think about competing in the Olympics, but everybody thinks they can compete in the markets. But there's more money competing. It's like a zero-sum game, and there's more money doing it. And the worst thing you could do is think you can time all of these movements. I guarantee you the game's a tough game to time. We put hundreds of millions of dollars into the game every year, and it's tough. So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way. The greatest mistake of all investors is to think that what has done well lately is a better investment rather than more.
Beautiful. my internet's going to play games, I could see. Okay, well, he goes on to say in a balanced way, and he says you need to diversify across assets, across countries, across across currencies. And I'll send you the link. You can watch it. It's from 25 minutes. There's one other short video I want to play, and maybe I can play that later. But let's see if this one works.
Understand what the power of diversification is in terms of the things that I'm going to look for. So what that taught me is the magic is you only need to do this simple thing. The simple thing is to find 15 or 20 good, uncorrelated return streams. Things that are probably going to make money, but you don't know, but have a good probability of making money. And but you have that are uncorrelated, that have low correlation. That told me that's what I have to go after, right? That's the key. A lot of people think that the most important thing you could do is find the best investment. Okay, that's important. Okay, but there is no great one best investment that can compete with something like that. So look at this line. When this comes down, you can improve your return to risk ratio by a factor of 5, right? 5 times the expected return for that unit of risk. You can't pick any investments that is probably, nobody's humanly capable in an efficient market probably to pick investments that are 5 times as good individually, but so that path. So it tells me about the power of diversification balancing risk. So this is the return to risk ratio that happens for each one of those. You know, like if I can get 0 correlation and I have 15 to 20, I'll have an information ratio, a return to risk ratio of 1.25. That means my probability of losing money in a year is only 11%, okay, as distinct from 40% with any one of them. So that's the power of portfolio construction and the power of diversification, okay? So it tells me what I have to go after.
And without further ado, I'd like to hand to you, Jan. And I wanted to set up with Ray Dalio, who's someone that I hugely respect. I would highly recommend that people go and look him up. I believe he's one of the best authorities to look at in the current world market. You can read his book. You can also go read his blogs called World Order. Tonight, though, we are hugely excited and very, very grateful to have Jan Wegelin. And he's going to be explaining to us. And if you look at his experience here, it's a market research specialist for over 30 years, a multi-award-winning researcher, a business solutions that are both insightful and cost-effective. He's worked on and coordinated projects across 21 countries and 5 continents, attuned to business challenges and how research guides decision-making, chairperson of SAMRA, SAMRA accredited researcher, and helped develop the POPI framework for the research industry. And what I'm really grateful for is 2 things. Firstly, Jan is a wealth partner, which is a shareholder in our company. And so actually has agreed to share with our community his knowledge. And secondly, from the presentation yesterday, is that with all this research experience over 30 years, he's taken it and gone, well, how does this infect us as investors? And what is investor sentiment? Because most of us think that that's what Ray Dalio was just trying to say. Most of us think we can go out and beat the market. And I love the way he said it. It's like trying to think we can win a gold medal at the Olympics. And so what I'm excited about tonight, and I'm going to stop sharing and hand over to you, Jan, is that what you're trying to do tonight is help decipher the code for the rest of us that are not Olympic gold medal athletes to make the right decisions and to still be able to run the race. And using that metaphor, just to finish before I hand you over, is that statistically, 99% of people will not be wealthy at 65, which means that 100 people run a race. And it's not that one person gets a gold medal, it's that 99 don't even finish the race. And with that introduction, I wanted to hand to Jan, because I believe he's going to give me, as much as everyone watching, the insights to help us run the race better.
Thank you, Scott and Lee. Thank you for the invitation. And it was some time in terms of preparation, just thinking through it, and having been involved in the industry for as you said there, a good 30 years. I've access to a whole range of different research projects and so on that have been shared through the community on the financial industry, and particularly in terms of investment. So I'm going to lean on those insights as we work through exploring the different anchor points that investors use in order to sway market reaction to asset classes. And then, as you said, and I'm very pleased to be part of the Wealth Migrate group, is then how one can benefit. So it is both a market view, but it's also a way in which anyone can benefit from it. So the approach I followed is to think about a person, and what I said was let's look at 2025. It's not far from now, but it is a very plausible future that we can expect. And the person I created for the setting is called Jenny. And Jenny is, in terms of the world that I created her in, she's a freelance journalist. She writes for both online and offline publications. She's been doing that for a long time. In terms of her life stage, she has a son who's now in secondary school, and he's beginning to find his own way and becoming independent and so on. And she has, as you know, with journalists, they have work on their articles or their topic that they explore, and then there's this point in which is a mad deadline and get the publication out and it's up. And then you have a day or two in which you start exploring new things and you repeat the process in terms of the deadline. So what happened in that time, and with her need to invest in all of the different things that she wants to achieve, is that she started a few different revenue streams. And I think most of us would be quite familiar with that, in that we have various roles that we play, and perhaps not just one vocation or profession in which we focus, but we do a few things on the side, and some call it your side gigs or those kind of things. So in Jenny's case, she formed really concerned about communities and so on. So she formed this community development blog, and sometimes she connects different funders with NGOs and so on. And for that purpose, she gets rewarded in terms of a management fee and something like that. What she also enjoys doing is content writing for businesses and small businesses or startup or whatever the case may be. And with her friend as a graphic designer, they then put together these websites. So these different revenue streams is what she uses. And then she builds up her profile like that. Now, from a technology point of view, she's downloaded a super app, and I'm sure most of you are very familiar with that. So it's one, instead of having 30 or whatever apps, you have one that consolidates all of that, and you can view everything on there. From a financial point of view, it obviously then gives you what's your net worth and all of those kind of things across investments, across platforms, etc. And you also have all the social media and all of those links together with it. One of the features of the super app is that it's got this planning function, which is basically a bucket list. And so some time ago, she decided that she wants to do a creative writing course. Some of the volunteers and activists and so on that she frequently engages with, they would like to tell their story. And so further down the line, in terms of her career and expectations on what she might do, would be to put together a biography of some of these activists and other people that she frequently engages with. So the morning comes up. There's a reminder on an app that it's time to review your bucket list, and she's reminded of this creative writing course that she wanted to do. And so having a look at possible options, she sets the search function to specific parameters. So, well, I want to do the course in these countries. It shouldn't be longer than X number of months, and it shouldn't cost more than a certain value. She makes coffee, comes back, checks all the results of it, decides which course she wants to do. Through her investments, make a few changes and pays for the course. And 2 days later, she gets approval. She's logged in. She's going to do the course, and she ticks off the bucket list. So there's a scenario of having a plan, thinking about how to achieve that, and how to make the money that you need to be able to do that. How do you structure that in order to meet those expectations? So from Jenny's finances, and just as a few things that I've already mentioned, but being a freelance journalist, that's the main source. She gets these management fees every now and then, and she's got a set of investments. One of them, and it serves almost like a bit of a social platform as well. She and 4 friends decided that every 4 years, one of the friends would have a chance to go overseas on a holiday or whatever, and all the other 3 contribute that year towards that holiday for the one person. So many of us would be familiar with the term stokvel, which is basically how that works as a rotation way in which you invest. And that's a bit of an informal structure, even though the money is invested in a formal on a formal platform in which there's interest and growth to that platform. She has, like most of us, and thinking about retirement and all of that. So she's got a few RAs, and then S&P 500 she's done. And I saw a few days ago, there's some real changes, speaking about the volatility that you mentioned. So these kind of things are happening, and that these investments don't necessarily all perform at the same level or in the same way. One of them is her dad thought, the Generation X type of thinking at the time is, let's plan for the future. And he started an investment fund when she was 12. Nowadays, when she talks to her broker about some of these, he tells her there's no way you can move that. The penalties are too high. It's not really a great investment, but it's doing what it's doing, so you can't do anything about that. And some of us may have those investments that it would really just be too costly to move, depending on how far you are in terms of the maturity of that investment. And then a property investment fund and a few gold chains. So that gives you a sense of the kind of platforms that she likes to engage with, and where she's trying to find the best growth for the various items on her bucket list as one of the reference points for which she's aiming to achieve in terms of her plan. So we'll return to Jenny's world through the presentation, but now to get into the bit of the business side of it. Talking about perceptions about money, and particularly starting off with the financial institution roadmap, which is generally the risk profile questionnaire, or it's a few items that you need to complete when you sit down with your broker, and he's like, right, okay, so you're a moderately conservative investor. That means that we should look at these kind of options in terms of what you would like to invest the money in. Now, the issue is that may be relevant to that type of investment, but it's certainly not relevant to everything. And that may change. So in some investments, you really want to be aggressive, because you want to see that growth, because your goal is next year. And if everything works out and it stays stable and you can reach the kind of growth that you're looking at, then it would be really a good thing. In other factors like retirement funds, etc., you may want to tend towards the conservative side of it, because you wouldn't want to risk that. So we don't always think about these things, and our needs and expectations don't always align with one of the 5 in a specific way, and more importantly, not in a static way. And just the illustration, the image there under the aggressive bar, I mean, that image might as well just flip around. So you could have that kind of growth, but you obviously run the risk of losing it at the same rate as what has been gained. So we understand that. We know how that works, and we've all faced those kind of conversations. Now add this layer to a next one that I want to share with you, which is about how people behave. And this is work that I've been doing for about the last three and a half years. And it's looking at, if you consider things, personality, your context in which the area in which you live and what's happening around you, your decision-making processes, and the way in which you believe that things should happen. If you combine all of those, you can obviously measure them all separately, but as a researcher, we don't want to sit down with people for 2 hours and work through it. So we really want to find ways in which these things can work together quite easily. So what we found was that there are 5 basic behavioral expressions considering personality, context, decision-making processes, etc., in the background of it, and the way you work with it is coming through in your behavior. So I'm just going to touch on them briefly, but I believe Jenny is a brave expressionist. She likes to engage with the world outside of her. It's not so much about her, but it's more about the interests, or finding ways in which to express her interest, and what really drives her to get involved in certain things and report on it and write her articles about it. So she's about exploring new things and new ways in which, from a money perspective as well, in which to invest. Responsibly practical, I'm definitely fall into that category. So my approach to things is, right, let's find a solution. This is what the circumstances are. Think about it logically, practically, and consider what are all the options and all the aspects and attributes that should form part of that decision. And you make the decision and you move on. It's sometimes longer term, sometimes short. Anchored hearts are people that really value what the cultural, language, heritage, all those anchors that form part of how things usually work or how they've been done in the past. And those are measures that are used in terms of making a decision going forward. And it is, history is a guide to the future in terms of the approach to money, specifically in this case. Instinctive neutralists. I like the examples that you shared at the start, Scott, because they really kind of played into the parts of my talk here. And so as an example, an instinctive neutralist might say, you know, today is Warren Buffett, tomorrow is Cathie Wood, day after is Elon Musk, and, you know, there's just way too much going on. And I really kind of struggle to figure out where and what and so on. There are things that are important to me as a person, and that I value, and I want to surround myself with people that I trust, that I can regularly engage with on these matters. And I take my lead from that. What's happening in the rest of the world? Fine. Everyone should have their own goals and ideals and so on. And they might or might not align with mine. And then the last one is naturally uncontested. Now, this is, you know, image and brand, and this is who I am. I express myself into the world, interested in what is happening in the world, but I play a part in that. And I contribute to that, and I want to contribute to that. And so flexibility is essential from a financial perspective in order to meet those needs, which may be and which may be quite frequent in order what they are, and some of them may be much larger than others. So the point around this is that none of these are right or wrong, they're just different. And we know that. We intuitively know that we think differently about the world, or think in different ways about the world and how we see that. And this is, if you take the first point about, well, are you a conservative investor or an aggressive investor? And you add this as a behavioral pattern to that, you begin to see that there are already some of these that may develop into certain tension points. I'm not reckless with money as such, but I need options in order to meet the kind of needs and expectations that I may have. Now, I want to add a third layer to this in how people invest. And you have active investors, so really 2-3 times a day, what's happening in this market? Where's it going? Should I move funds here? Listen, there's a great opportunity coming up in that part. So it's a lot of sharing. It's involved in it. It's really about having a platform to trade through with speed and execute transactions quickly, safely, and efficiently. The next is a serious investor, so really data hungry. Help me understand what I need to do in order to get there, and I must be sure that where I'm putting my money is that I'm clear. I've got a 20/20 vision of what's happening there. I certainly understand that there are risks around it, but I don't want to be blindsided. The next, life goal planner. This is a little bit like Jenny in the example. So she's got certain goals that she wants to achieve. Some of them a little bit more longer term than others. And it's about having access that can maximize profit, but it's a stable financial service provider platform in which she feels secure and she can engage with that when and how it's necessary to do. And then the final one is really about convenience. So it's a one-stop place. I've got everything that I need to do. I can move money around, and it's not so much about following the investments as such, but it's knowing that what I'm doing is a good place to invest money, and when I need it, or whatever the case may be, it should just be easy to engage with it. Now add that as a third layer to our kind of view in which we're beginning to create in terms of conservative, aggressive, how we behave and how we engage with the world. And then thirdly, how do we want to work with our money? So you can begin to understand that complexity should really allow the individual to find its own way and be able to have those options in which to engage with these platforms and to use their money in the way that they see fit. And as part of that, if I may share a story, my first engagement with investment many years ago, but I think it's relevant to the point. So I was in second year stayed in a commune. I mean, we were about 8 people in the commune. It was right next to the union buildings in Pretoria. I just started to work, and my first thought was, right, I need to start this investment thing, and had no clue where to start. But I thought, right, my dad he's every now and then he meets with his broker who I've met. And so maybe I should give him a call. And he's a good broker in that sense, and my parents have really benefited from that. They've been living off their investments for about 22 years now. So anyway, so I phoned him up, and he had this kind of weird style that everything from shirt to shoes is all white. That's all the time, every time you would see him, that is who he is. So now you can imagine kind of this broker. He was in his early 50s at the time, and he walks into this commune, and it's a second-year student. It's about 5 pieces of furniture and a whole lot of other stuff around, and we're going to talk about investments. And I think he was happier than me when we said our goodbyes about 12 minutes later. And I was none the wiser, and I didn't know what I didn't know. And he was probably wondering what the hell he should be doing with 200 Rand. And that's a different context, because now we have all these different options, but it is also about where do you start and how do you start. And even if you have only a few Rand or whatever the case may be that you can invest, is how do you do that, and how do you mix that in terms of your goals that you are or that you would like to achieve. So moving on from that and looking then at novelty versus reality, and what are these new platforms and how do those meet up or match the kind of expectations and needs that we do have. And there are really 4 very basic principles that come out, and they're not ranked or split into any specific way, but people have or may have a little bit of a stronger focus on one of them, but I would imagine that all 4 in some or other way would be relevant to any investor. And it is about improve my financial services relationship. And the interesting finding about that is it doesn't matter if you're tech savvy or if cash is king, or you're absolutely aware about, the latest stocks and the latest investment platforms that you should be going. Across all of them is that the disposition where novelty and reality unite, is where I can do what I need to do, and these platforms just provide the opportunity to do that. The second, demonstrate that you understand me, in order to provide the information and all of the different aspects that I need to be able to do what I want to do in a simple and yet authentic way. Then third, ensure I'm connected with my money. I mean, the example of Jenny, she got to her desk in the morning, she got the reminder, she should check her bucket list. Before 8 o'clock, she had made a decision where she wanted to do her course, and money has already been, put into her account. She just basically needs to do the transaction. So there's no external need or anything like that. It is constant connection with the money that she has. And then lastly, make tomorrow a better place for me. What are my abilities today? What is it that I want to achieve? And how do I connect those 2 things? And in which way and how do I get the best return on what those investment options are? So what has been the market response to it? And in the videos that you shared, it really aligns well with this part, is that the investment community or platforms for investors basically focused around having access, sophistication, and not necessarily sophistication in terms of the platform, but sophistication in you can have different risk profiles within one asset class. You can have subsets within an asset class in which you can invest, whether it's real estate or whether it's commodities or whether it's luxury goods. and that you can invest in within these asset classes and the diversification that exists within. So the sophistication part, being able to invest internationally, fractional shares, which I think is really a very important part of diversification in that. I'm really interested in the health sector. I mean, moving from DNA to RNA, and then into the various forms of stem cell research and where all of that is going, and the ability to be able to do that. And we've seen that even before COVID started, so it's just really exploded following that. But I don't have the money to buy a hospital or invest in that in some other way. But what I can do through a fractional share is that I can own part of that building, and as the industry grows and strengthens, and particularly the brand that owns that building in the medical space does really well, so will the assets that they own. And that could give me a part of that benefit in terms of being part of the asset class in that way. Information about what is possible, how things are developing and changing, and of course, how do you deliver that service, and that it should be easy to engage with and give you the options to work through it. So the combination of these together with the different asset classes, and we'll talk a little bit more about the asset classes now, is that they behave differently. And the point that was made around that they shouldn't correlate is exactly that, and that one should make the decision based on it. So no matter what your goal is, diversification is key. And in the sense of Jenny that we looked at the start, that was exactly what she's done, and gave her the option to tick a box on her bucket list. So to summarize, in terms of the diversification view, and some of these points were really made in the intro videos as well. So incorporate different asset classes because they behave differently. Spread your risk precisely for the same reason. Make sure that the investments do not correlate. So when one is really performing poorly at some other stage, you have benefits in others. And as Ray Dalio said, I mean, a factor of 5 is really significant. Diversify based on financial goals. So what do you want to achieve? And if it's a 2-year goal, perhaps look at something a little bit more aggressive, or whatever the case may be, than a longer term thing, which you may want to move a bit more towards the conservative side, if that is the case. And invest in pooled investments or fractional assets. And importantly, start small, because learn how the whole thing works, etc., and find out what all the different benefits are, and don't just throw the whole lot in. And these options are, and I know Wealth Migrate as well, it started with the option to invest in that, and it really just opens that opportunity. So having that knowledge, understanding all the different, from either conservative to aggressive, how you behave in order to understand your engagement with the world and what your financial needs within that is, and how you would like to invest as an active investor or as a convenient investor or one-stop shop type of investment. All of them are based on your own goals and needs and expectations. So that knowledge gives you a sense of agency, and that then brings us to the different asset classes. And these asset classes are spread from real estate, which is your most illiquid class, to cash, which is the most liquid. and they also follow in that order. And so for anyone we all invest in houses where we live because we can sell them one day, but you can't sell them very quickly. And they don't give you access to the liquidity that you may need at some other point, but they are investments aimed at the long term. What I really value about what Wealth Migrate has done is it's linked to. So you have something that is really illiquid, but you can have cash on it through all the various investment platforms. And that, I think, is what the heart of diversification is about, is to be able to link the various asset classes in ways that meet your needs and expectations. And from a credentials point of view, there in the bottom right corner. So like Jenny, in terms of her investment in a property portfolio that she has, or one of the items in her portfolio, is 32.5 million earned by clients. And it has made, in the case of Jenny, but in all of our lives, depending on what our needs and expectations are, is that we can reach certain goals by managing our funds in our own way, and which would make sense in terms of the needs and aspirations that we have, understanding how our relationship with money is or could be in terms of the options that are available. And then lastly, how one can benefit. So I mentioned that I'm really interested in the health industry, but in terms of industrial or office or any of those different cohorts within the asset class, and each of them is also attached to various forms of risks that one can choose from. So going through those layers in terms of understanding the needs and expectations of the what money should do for you, is that one can plan that even within different asset classes and platforms. Thank you. I really enjoyed that, and I think the working through it and just beginning to build that picture that I just shared with you was well, enlightening for me as well, in terms of just bringing it all together, and I hope so for you as well. Thank you, Scott.
No, brilliant, Jan. It was amazing, and sorry, Lee, I don't know if I spoke over you there, but I think it's the immediate thought that comes out in my mind, and I sort of actually mentioned to Lee privately, is like, we should be getting MarkData to come and work with our marketing team and make sure that this is actually being emphasized on a website, and in terms of customer journeys and everything in between. But anyway, that's where my brain goes immediately, because I look at it and I love it. And why I say that is that if people have watched our previous webinars and stuff, I believe one of the greatest trends is personalization. And it's what we refer to a lot in terms of what we call smart investing. And I'm sick and tired of going to see my financial advisor and being put in a box, and it's just a box, and I know that it's not just me, everyone else is sick and tired of it. And I've always said, and what I'm about to say already exists, because you've got these different personality types, and they've all got, I'm talking people now, and you've got different needs, and you've got short-term needs and long-term needs and all this sort of stuff. And Lynn Shones asked a great question, which I recommend we move to next. And then you kind of got these different assets and investments on this side. Sorry, I can't quite see my hand here. And, they've got pros and cons and, risks and profiles and all that. Now, I'm not talking about sending a rocket to the moon here. This is like internet dating. All you got to do is marry together this person with this person. It's really not that complicated, and it becomes personalization. And that's for me what I call the definition of smart investing, which is where people can ultimately create their life plan and based on their own personal needs, and then get the assets that suit the life plan. But at the moment, what's interesting is that everything that you've shown there, Mark, generally is still a theoretical concept. And what I mean by that theoretical, it's not easy. You know, it's Jill or Joe soap. It's not easy for them to determine, oh, well, that's my profile and that's my life plan. And therefore these investments plug into, you know, that life plan. Like it's all has to, unless I'm unaware, but generally it has to all happen manually, which is why I greatly thank you for the knowledge tonight, because it all helps the investors manually do it. But my wish is that actually we can, you know, truly bring that knowledge and that logic into the platform to make smart investing that much more powerful.
Yeah, absolutely. If I think the personalization is, you mentioned it, well, a few months ago, probably by now, when towards the end of last year in one of the webinars, and it was really just absolutely, I appreciated that, because that's exactly where things are moving. We have had the 60s and 70s is make it and people will come type of style. And we've become more sophisticated by engaging in different platforms, and just diversifying them and making them more interesting, etc., etc. But really the last mile is, as you say, is bring those two parties together in which they both understand exactly what's going on and how to make those linkages more long-term and sustainable, and also based on greater understanding about what they are. So no, thank you for that comment.
Lee, can I recommend that we go to Lynn Schoen's comment or question? And then I've got something that I just want to wrap up. But if anyone's got any questions, and Jan did entice and recommend that people comment and question and whatever, and Lee said we will bribe you with helping improve the environment with, you know, either energy or water or trees. So I mean, basically you can help the environment and the planet to be a better place, and you can engage, or you can keep quiet. Like, you get to choose. But yeah, I don't know, Lee, if you want to move to Lynn Schoen's comment there, because I think it's quite relevant.
Nothing like a little healthy bit of blackmail, Scott. Sorry, Jan.
I just want to stop share, because then I can see everyone properly.
Perfect.
Good.
So Lynn has posted a comment. I'm not sure if everyone can see it, but my feeling is that one has the funds and opportunity to invest at certain times in life. At these times, one looks at what is offering value and buys in. At the end of life, you should end up with a variety of investments. Better than buying something ridiculous like a negative interest rate bond just to say you are diversified. What are your thoughts on people that are taking on asset classes that they don't understand or are not going to add real value to where they want to go, just to be able to say that they diversified?
Well, I think from my own experience, and I tried gold shares at some point, and it was literally because it just a range of emails that came through over a matter of weeks, and it was that was towards the time when the presidency in the US changed, and all of those kind of things happened, and it was just moving towards gold is going to be the new thing, and all of that. And I did that, not a large amount, but it was probably about 5 or 6 months later, and the needle didn't move at all. In fact, it was just a matter of I better get out, and it might not be gold as such. It might have just been the wrong platform, in which you have different admin fees and all of those kind of things. So you do get the invitation, and it may even look interesting, and it may look like this is a good idea to go for. perhaps it is in line of where, the kind of circles that you move in, is that, yes, this is what I'm doing and this is where I'm going and I'm going to invest in this. And all of those are prompts. And as businesses that advertise, so do platforms that want you to invest their money in terms of the different asset classes that they promote. So you may have that. The call, I think, is important to consider, is to understand what you want to do with it, and to understand that the money that you have can work for you in ways that meet your needs and expectations, irrespective of what those things are that may be around. But certainly, we all get influenced by advertisements, etc., etc. That's why they're there. And I think the other point around it is, when you're in that position, then start small. And just reduce the possibility of the risk that might be associated with. And then the second part of the comment there is that you may have, a whole range of different things at the end of your life, and how do you start consolidating that, or maybe not? And I think that is just, there is a certain discipline around investment. And whether you spread that across asset classes, and which asset classes, and long-term or short-term, all of those things determine how one should monitor and manage that process. So diversification, yes, absolutely. To the nth degree, that might not benefit you. And I think there's no real golden rule as to what that number of diversified portfolio or diversified investments in the portfolio should be. And I think the opening video made that quite clear, is that and the point I made was that as long as they don't correlate, then you have the best option of that the different investments should give you a better return. And where they really start to become difficult to manage, or they become quite aligned in terms of their returns, then it should be a point about perhaps reconsider that. That would be my comment.
It's just interesting, just to add to what you said there. I think, along with personalization, another thing that people are wanting in their life is simplicity. Like, our lives are so complicated. And, I've been investing internationally since 1999, and offshore structures and tax and, lawyers and accountants. And then that's just in America. Then you got it in England. Then, you got it in Europe, now in Australia, and it's in South Africa, and it's bloody complicated. And so, I think, one of the things that I find a lot of people are wanting as well is, yes, you want the diversity, but you also want the simplicity. Like, you don't want your life, being overcomplicated. Does that make sense? And I think the beauty of technology now is that you can go to platforms like Wealth Migrate. I'm not saying it's the only one, but you can have that diversification, but simplicity in one place. Like, you don't have to be on a gold stock platform and a structured note platform and a real estate platform and a medical platform, to your health assets, and buy a house in London, and because it's a dog show to try and manage it,
Exactly.
So, listen, Lee, can I? I'm just conscious of the time. We're on 8 o'clock. Can I just run through some slides in terms of conclusion, and I'd like you to bring up the survey once I'm complete, and then if anyone's got any questions, fire it through. I've got 2 questions that I'd like to ask Jan, but let me just. I just want to share these slides very quickly in terms of a kind of an idea. So for me, in terms of what we've heard from a Diversification 5.0 and kind of what to do next, in terms of, what people are. The first one that I wanted to mention is we're really excited about our Wealth Starter Pack. Now, it's literally, launched and is in the process of launching in terms of where we're at. And I'm going to just explain it very quickly to people, because if even tonight, it's interesting what you said there, Jan, there were 4 needs: improve my financial services relationship. So I put that down to education, demonstrate that you understand me, personalization, connect me to my money. Like, I don't want to have to go through a third party and send a PDF to try and get, I don't know how to say this nicely, but I have a private banker right now. I can't even get hold of my private banker. Like, that's not connected me with my money. Like, and then make tomorrow better for me. And for me, the starter pack is really, we've tried to, take those needs. And what I mean by that is that, often people are kind of always looking for clarity. Like, before they get started, they want kind of clarity and they want confidence, and but ultimately, if you don't make commitments and actually get started, you'll never get anywhere. And so what we've tried to do with our starter pack is give you all the different parts. Like, you've got the clarity. Like, there's 9 steps from, like, basically we call it getting from A to B. Like, you're here, you haven't started, you want to be here and earn a return. And there's basically, you've got the fundamentals, you've got setup, and you've got investing. And there's literally 9 steps. You've got the confidence because you've got the full support, system, both from our team and also from our community. You've got the commitment because you've got $100, like literally in your digital wallet, you've got $100 to get started. And what's quite nice is that now with our minimum investment of $10, and considering we're talking about diversification, that means you can invest in 10 different assets in different countries, different currencies, and even with different partners. So you can literally do what Jan has taught you to do tonight. You can do what Ray Dalio has taught you to do, and you can literally get started, and ultimately you can get to success. We've also created a 3-hour a wealth investor intensive workshop. So a lot of what we've spoken about tonight is the why, and then this workshop will be the how. Okay, the how and the what, because we always find people are like, well, how do I do it and what do I do? And so we're literally going to take you through those 9 steps so that you've got the confidence and the clarity to actually make the commitment. And the next one that we're going to be running is on the 24th of May. So you can literally, join us and we'll take you through it live and, take you through it. Because, and for me, and sorry, I have said this earlier, but I'm repeating it. Not a single person is going to get any value by just getting the knowledge without taking action. And I always joke with people, none of us learn to walk by reading a book. Like, at some point we had to stand up, and this is the way people can take action. And then finally, if people want to get started, they can actually go to thewealthuniversity.org/starter pack, and you can actually go read all about it. Like, you've got the course, you've got the Wealth Hackers, which is our community, you've got the $100 voucher, you've got our own team that will literally hold your hand to onboard you. It's not a good analogy with what I just said with the private banking analogy, but let's use a better analogy. It's like flying on an airplane. You don't have to fly economy, you can fly business class or first class and be looked after better. And that's really the whole idea, and we'll hold your hand to getting started. So that's the one way that you can go on a platform like Wealth Migrate and you can literally get involved in diversification. A second way is that you can just go straight to the platform. You can go to wealthmigrate.com and you can go and invest. And Jan's already brought up, you've got real estate, you've got structured notes, you've got convertible debt, and I'll explain what that is now. And you've even got the quarterly basket. Like, if you don't know what to do, or you don't trust yourself, or you want to, you're too busy, to go and read everything, you can, our chief investment officer is highly regulated and has the licenses to be able to deploy funds on behalf of other people. So you can actually put your money in the quarterly basket, and then he diversifies it every quarter. So it's the kind of the easy option if you don't trust yourself in terms of that process. And then finally, you can literally speak to a wealth consultant. So you can speak to one of our team members, and they can help you and guide you, through this process. So I tend to joke with people, but there's 3 ways, to take advantage of what you've heard from Jan tonight. Just in terms of our overall business model, it's quite simple. For us, we've got the community in terms of wealth movement. We've got the education in terms of Wealth University. So going back to what Jan was saying, this is really trying to run through those 4 steps, although having learned what I've learned tonight, we might have to review this a bit. And then you've got the investment step. And then ultimately, there's the different needs, and people can invest, and there's basically a process. And we've kind of got our B2B process on the other side. We as a business are growing at the moment massively. Like, we've got all the pieces of the puzzle in place, and it's now, how do we grow it? How do we reach more people? And so it's, how do we grow our distribution? How do we grow our profitability? and ultimately how do we grow our technology. And the way that we've grown our business, we've got over 1,000 shareholders in our business. And the way that we've grown it is through a community approach. So it's our community working together to grow the company, but then sharing the value of the upside, in very much what Jan is kindly sharing with people today in terms of the process. And I always say there's 3 reasons why people become wealth partners, which are shareholders. They invest to make a profit, they invest to be part of a like-minded global community, and they want to be, part of a profitable and purposeful endeavor. There's 3 needs as to why people actually do it. And then, just in terms of, I'm not going to go into this because we did a whole webinar series on this earlier this year, but, in terms of where this whole technology is going and how exciting it is, where we're kind of moving from this old world where, and I love Jan's example of kind of where we've been in the kind of the traditional financial industry. And what he's done tonight is giving you insights in terms of where the world's going. Okay, it's pretty obvious, like of where it's going. But the point is, like, the world's here and we've got to get to there. And then platforms and companies like Migrate, we're not the only one, is helping bridge the gap between where the world is today and where it's actually going. And obviously, as investors, we can get to benefit from riding that wave. And so really just in terms of the next steps, and Lee, if you wouldn't mind, you can chuck up the survey and I'll leave this slide on but these are our contact details. If you want to go to the starter pack, there's the link. If you want to go to the platform, you can go to Wealth Migrate. I invite you to start your journey to diversification globally. And I also invite you to becoming a global citizen. And what we would ask is that while we're putting up questions and just finding out if there's anything that people want to know, is we've put up a survey and we're really interested. So again, I'm going to harp on this word personalisation, is that if you tell us what you're looking for, then we can help personalize your journey to make it more effective. I don't know about the rest of you, but my time is very important to me and I don't have a lot of it. So I'd rather, if I'm talking to someone, they come prepared and they know what's happening. So I tend to believe that surveys, help us help you is the best way to describe it. So do us a favor and chuck in the survey. I see there's a couple of questions that have come through. And I see you've replied to Letitia, which I think is great. If people didn't see the comments, she actually, what was it? She was your tutor or something at university.
Yeah, my lecturer. So yeah, I absolutely remember her, and it was quite a few months ago. I was working on a social psychology and so on, and she came up in my mind. So great to hear from you, Letitia, and we should definitely find a way to catch up soon.
We're really excited about what she's doing and how we can actually work with her students. And one of the things that I'm always fascinated by is Warren Buffett started investing when he was 13. And there was a saying that came out, I don't know if I think a lot of our community have seen it because it was posted on our groups. But Jeff Bezos, the founder of Amazon, asked Warren Buffett, one of the wealthiest men in the world, and he said, if it's so easy, why doesn't everyone copy you? And he basically said, well, no one wants to get rich slowly. And below that, there was this graph where it showed that he started investing at 13, but because of compound interest, his real wealth only started accumulating in his late 50s. and it's just, back to Letitia and her university students, my invitation to anyone here is, if you're a parent, get your children started. And I got Jonty going when he was 5, on platforms like this. So I've got a question for you, Jan. If someone, has this inside information that you've presented and kind of the market knowledge and even to some extent how the financial industry works in terms of market sentiment, okay? So that's on the one side. And then I've got my personalization. Like I know that I'm X type investor. How can I, based on what's available today, use that information to make me a better investor?
Yeah, it's a good question. The understanding of and I'm going to relate that back to the when you look at purpose versus identity. So many say that you can't really have a purpose in life if you don't know who you are and what your identity is. I think the key to that lies in understanding that relationship between what it is that you want to do and how you work with money and how you engage with it in terms of those 5 different behavioral groups. That gives you an indication of where some of these behavioral patterns are. And if you understand what that is and how you want to work with money, then it really begins to guide you towards what are the different platforms that you would be comfortable with, that gives you the information that you need and helps you to conclude that process to finally make the investment. And so that first understanding, and then towards what it is that you want to go to, because if that is not the case, then we get led by whatever is available in the market. And the case is what I shared is how I met my first session with that broker was, so are you conservative or are you aggressive in terms of that? And we didn't even get to that point. But and I had no clue at that stage. I mean, that was just beginning to explore this phase. So it is really about building both those up and what do you want to do with it, and finding the platforms that really speak to you, if I can put it that way. And because that is where you're going to feel most comfortable with and engage with.
Brilliant. I love what you just said there around the purpose, and I try and teach people. It's not my philosophy. It's a guy from Simon Sinek called start with the why. And I always say when it comes to wealth, if you try and figure out the how and the what first, but you haven't figured out the why, you'll never succeed. Like, figure out the why first, and then you'll get the how and the what, which is my take on what you just said. And by the way, if people want to know how to do that, again, you can sign up to the starter pack. We've actually got the wealth plan, and is actually in there. It's actually a certificate that you literally fill in. It's a 60-minute course. We teach you how to do it. You fill in it, and it's exactly what Jan has referred to. And if you want me to, I can put it in the chat box, and I can actually show it on the screen quickly. Because it's the 5 whys, it's your purpose of what Jan's just said. And then it's the practical numbers, which then become the how and the what. And then any investment should fit into your formula to ultimately get you to your outcome. I mean, that's what I learned, and have been doing. I could be doing it better, no, as we all could, but I've been doing it for 20 years. Jan, my next question, and the one that probably excites me the most and kind of gets me out of bed in the morning excited, is in this research, and you were sharing with us yesterday, you've researched companies like PayPal, and that have been game changers in the industry, and they took kind of, as the markets have evolved over the last 20 years. If you take this personalization, and if you take kind of platforms and accessibility and kind of all these things you said here of the 4 needs, and linking the various assets to your needs, and all of them, I've got them all written down here: long-term, sustainable, etc. What time frame do you think we're looking at? And again, I know you're not a financial expert, but you're a data market researcher expert, as I understand. So I'm asking you to look into your crystal ball with your market data and say, how long do you think it's going to be until things like smart investing really become a reality? I mean, you use 2025 as an example. And that's only 3 years away. I mean, to put it in perspective. So, what time frame are we looking at where we really evolve from, what I'm going to call old industry version to kind of new industry?
I think if you consider the digital kind of lifespan, if I can put it that way, we've really been forced into what was very much a kind of dream world pre-COVID, and it exploded in the last few years, 2 years, and so you have a mixed reaction to that, in the sense of the novelty and what it can do. And you have all these discussions about, well, AI is going to take away my job, but this is going to happen and that's going to happen. So you have a sense of feeling disrupted, feeling like, you know, I mean, the common phrase during COVID was, can things just not return to normal? And so we are in that phase where we're kind of beginning to leave behind what we were really, you know, quite comfortable with, if I can put it that way. And we're being steered into a direction which we know have great potential, and there are all kinds of things that it makes possible. However, what is it? How's it going to work? And I think in answering your question is, you know, so how long is it going to take us to kind of get used to that? And I think 2030, we should really be very comfortable with it. And the in-between steps in what it takes to, you know, find the different ways and how it's going to happen and where it's going to be is, well, I don't really know what exactly within the different market spaces, but from that, having said that as one thing within a South African context that I know really well, we live in a multi-stream digital market. So some are extremely engaged with it and really quite, you know, have a good and strong narrative about what it is about, and others are, you know, beginning to explore a little bit about data and what it means and what it can do. There are all kinds of reasons why that is the case in terms of you know, economic growth and all of those different aspects. So in the South African market, I think there's a perhaps a longer journey to that. But I think in terms of a more broader sense, in a global sense, beginning to really get comfortable with these kind of things, that would definitely happen in the 2020s. That we begin to see that. I mean, the super app that I refer to, I found quite a few examples of it, especially in Far East countries and some in Europe as well, where this is beginning to, you know, people are beginning to organize their lives using that. And that didn't exist, you know, just about a year ago. There were kind of ideas around it. And now it's, you know, people are posting it on their Instagrams and whatever, and just saying how great it is to just have one access point, and everything can be coordinated that way. That's basically a year. So I don't think that that horizon is that long, but in certain markets it may take longer.
Interesting you say that. I remember a story when I was a presenter at South by Southwest, which is one of the biggest technology conferences in America, and they were talking about AI and virtual reality and all these like exciting new technologies. And then I was like, you talk about virtual app, and I was like, do you guys know what WeChat is? And they've never heard of WeChat. Now, by the way, most Americans don't even know what WhatsApp is. And you know, WeChat in China is that super app. I mean, you can do everything. You can bank, you can buy food, you can, you know, talk to your friends, you can, you know, do everything. And it's interesting in the emerging economies, China, India, Africa, where the super apps actually are growing a lot faster because you've got this rising middle class and everything else than in the first world, where kind of everyone's already got traditional banking. And like, it's a hassle. I've already got my traditional bank. You get my point. Like, you know, so it's fascinating what you're saying there. And yeah, I think it's probably, you know, quite a good way to end, which is where, you know, we're in for a hell of a ride in the next 8 years in terms of this whole digital adoption. But the one thing that I love about what Jeff Bezos says, and it's why we want to start Diversification 5.0 with you, Jan, and I'm deeply, deeply appreciative of your time, is that in Amazon, which is growing to be one of the biggest companies in the world, they always said the technology will change, but the customer's needs will never change. And so we've got to build a business around solving customers' needs, and then we'll just use different technologies and whatever, and we can evolve and adapt. And I think when one talks about diversification, and even how you answered that question, you know, if you build solving people's problems and you solve their fundamental needs, no matter how technology changes, whether it's a super app or anything else, it ain't going to change. Most people's needs are not going to change over not even decades. And I think it's a good way to end off and to say thank you very much, because I've loved learning about your brain concept with, you know, brave, expressionist, responsible and practical, anchored heart, instinctive neutralist, and naturally uncontested. I'd love to know what other people think I am. You know, your type of investors between active, serious, life goal planner, and the one-stop shopper, your 4 needs, you know, et cetera, you know, the linking the various assets. I love what you said with liquidity between, you know, real estate, which is, as you said, is the biggest asset class in the world, but completely illiquid, and how it can be linked. And ultimately, how you spoke about personalization. And I deeply, deeply appreciate you sharing with our community, because you've shared with them the human needs that drive behavior. And ultimately, the technology is just an enabler to solve those human needs. So thank you for your time. I deeply appreciate it.
Thank you so much. It's been really a very, very good journey for me, and I enjoyed being part of that. As you said, I'm not a financial expert as such, but this has really just opened a few new conversations for me as well. So much appreciated, and thank you for the opportunity.
You'll definitely be getting a call from our marketing team as to how we can take this knowledge and make sure that it's part of our customer journey.
Happy to do so.
Well, thank you very much, both Scott and Jan. Jan, I can't say thank you again. Scott did it all, but we do appreciate you, firstly, as being part of our community internally through Wealth Partner and an active member in our community, but also sharing your knowledge. It really is appreciated. Scott, thank you for making yourself available, as always, to be on the front foot for the webinars for me and to our attendees today. You are our gold. Thank you very much for spending the last hour and a half with us, getting to know a little bit more about the insights and needs of investors and how we marry that together with technology. We will be having future webinars, so please look out for our social posts and our emails. And as always, we ask you, if you found value in this, please do share it with those that you believe could get value out of it. And if you have any questions, please feel free to reach out to me. My mobile number is there, as well as my email. You have various members within the community that you're connected with, so please reach out to your wealth consultants or to anyone that can assist you. So wherever you are.
And Lee, sorry, just before we cut off, you know, we're on a lot of the people online. I recognize the names, and they're on the different WhatsApp groups like the Inner Circle, etc. Comment on the groups, you know, if you found value tonight, because we will post the recording, and you know, I'd love more people to get the value. I've got a tremendous value tonight, and I want to make sure that people realize the value. And why I say that is we're all overwhelmed with information, so it's hard to know like which recording to watch and which ones not to. You know?
Exactly. So thank you very much. And I did say that I would wrap up and let you know how much we are going to be donating on your behalf. So because we always believe in education, that is always our biggest, because just for being here, whether you interact or not, you donate a day. So we have got 32 days of education, 7 days of free water, and 17 trees that are being planted. So thank you very much for the engagement and everything. We really do appreciate that. And we hope that you remember to engage more fully in our future webinars, so that we can really have an impact that is beyond our borders to those who really need it. So wherever you are in the world, thank you once again for joining us. Take care, be blessed, and we look forward to seeing you on a webinar soon. Goodbye, everybody.
Thank you. Bye.